Hi, this is Kribakaran Rajendran, founder of Algo Trading from squareofbots.com. So in this video, we'll be talking about is 920 straddle stopped working altogether. Is there any change in market regime which is causing a 920 straddle strategy not performing well like before? Or is there anything that has changed fundamentally? So we'll be doing a detailed analysis in this video. So if you're a person who's doing a kind of 920 straddle strategies with different stop losses or different entry timing and wondering why is it not doing well in recent past, definitely this video would be really helpful for you. So to get started with, the rules of this strategy is we'll be entering into a short straddle strategy by shorting at the money call option and put option of weekly expiry at 9:20 a.m. with a 25% stop loss. So different people use different stop losses. Few people use 30%, 40%. So there will be a complete set of people who uses a stop losses ranging from 20% to 40 or 50%. So in this example, this is the rules that I have considered, where the entry is at 9:20 a.m. where we'll be shorting both call option and put option of at the money with a weekly expiry with a stop loss of 25% on each leg. So whenever a stop loss is hit on any leg, that leg will be closed and the other leg will be kept open and will be closed only by end of the day. So there is no targets or there is no trailing stop loss in this condition. This strategy has become widely popular and because of the rise in no code platforms where you don't need to really code to backtest any specific strategies. There were a lot many people who started with a 920 straddle type of a strategy. So any people who get started with option selling, mostly they do a variation of 920 short straddle strategies. And in recent past, in the last couple of weeks, this strategy has been in drawdown, where this strategy used to make profits every single month, or most of the times it used to make profits. But in the recent past, because of higher volatility or because of multiple other reasons, this strategy is not really doing well. Is it mainly because more people have started this specific strategy, or is it because of rise in many execution algo platforms where many different users are placing the strategies, no rules and executions at the same time, which is causing the issues, or what is really causing the issue? So let us dig deep and do a detailed analysis on how this specific strategy has performed in live markets in last 1.5 to 2 years, because this strategy we have deployed it as a bot from 2020 itself. So for the last 2 years we have live data. So we will see how this strategy has performed in live markets after all charges. In addition to that, we'll do a complete detailed analysis of the last 5 years of backtest results to see how this specific strategy has performed during high volatile period, during low volatile period. What are the day wise profits? Which days are usually highly profitable for the strategies? Which days are not profitable? And how the strategy used to do well during gaps? Because we were facing higher number of gap days in recent past, is it stopped working because of that? So we did a detailed gap analysis as well to see how the specific strategy has performed on gap up days, on gap down days, on flat days. So once we dig deep in all these data, we'll have a clear cut idea. So we'll start with the day wise profits. So this is the overall backtest results for the last from 2017 to 2022 of the for one lot of PNL after all the charges. So if you could see here, from Monday to Friday, mostly Mondays are profitable and Wednesdays are profitable and Thursdays profitable. Tuesdays and Fridays are not so profitable. So this could be mainly because due to the overnight news that happens during the weekends, Mondays usually be a trending day at times. So when the market moves in one-sided direction, Mondays tends to be making a profits. Wednesdays and Thursdays are very nearer to the expiry. So obviously the profits are much higher on these 2 days. But in live markets, we have noticed that Fridays are not so profitable days to deploy this strategy. So the previous slide, we saw what is the total summation of profits on each days. This is the average profit per lot that we could make from Monday to Friday. So again here, Wednesday being the highly profitable day, followed by Monday and Thursdays. So Tuesdays and Fridays are not as profitable as compared to all other days. So even the live results that we checked from 2020 to 2022 till date, we could see Wednesdays being the highly profitable day, followed by Thursdays and Mondays, and followed by Tuesday. but Fridays are not really profitable, and in fact, it ended up in loss overall. So this could be mainly because Friday being the start of the new expiry, so obviously the premiums would be much higher. So when the stop loss gets hit, the loss factor gets increased on Fridays. Wherever if the same stop loss is hit on Thursdays, the premium would be trading at a much lower price. So obviously the losses are much minimal during Thursdays and Wednesdays. But Fridays, with the live results that we could see, are not really very profitable. So this is the gap analysis. So we checked what are the list of days where the today's open is greater than previous day's high price and today's open is less than previous day's low price. So basically a gap up and gap down with respect to previous day's high and low instead of previous day's close price. And what are the days that are flat, where it neither gapped up nor went down, it was a flat opening. So what are the profit scenarios, the total summation of profits allocated on each of these gap days? As we could see, the number of gaps are really minimal, because only when there is a huge uncertainty that happens in the market, the gaps are usually high. But most of the days the market doesn't gap up very frequently. So obviously the number of flat days, the profits that it made on flat days is much higher. But it did not make any losses on the total summation of overall returns from this 920 straddle. Did not give any negative results either on gap up days or on gap down days. So this is the average profit made with per lot, with one lot. This is the profit made with respect to each and different gap days. So on gap up days, the profit per lot is around 600 rupees. On gap down days, the profit per lot is much higher, which is around 800 rupees. On days which is neither gapped up nor gapped down, it was actually flat, which is around 400 rupees per trade. So basically, irrespective of the gaps, this strategy has performed really well in different scenarios, in all different scenarios. So gaps are really not an enemy of 920 short straddle strategy. So this data clearly proves that even on gap down days, this strategy has made profits, and on gap up days as well, this strategy has made profits. So there are recent gaps is not the sole responsible for the strategy to make losses. And there is another set of people who believe that high weeks is not suitable for 920 short straddle strategies, or weeks between this range to this range is not really suitable. So there are multiple claims that has been put forth with respect to 920 short straddle strategies, where people use wicks as a filter. But the chart that you seeing in front of you is the profits made, the total summation of profits this strategy has made during different wicks periods. So from 2017 to till date, the VIX has moved between at the lower end at around just 10 to the higher end at around as high as 80. So as you could see, the bot has made profits during the low VIX period as well. Between 10 to 22, it has actually made profits. On even the high VIX, as high as 83, 70s, 50s, it still made profits. So it doesn't matter whether the VIX is at the lower levels or higher levels. This strategy has made profits in different VIX environments. So all it matters is not the VIX or not the volatility, as long as there is a one-sided direction movement that happens in the market, whether on the downside or on the high side or on the upside, it tends to make profits. So only when the market gets into a directional space without knowing where to move during the intraday movement, it tends to make losses. One of the very important factor with respect to a strategy like 920 short straddle strategies or any kind of breakout system is your 80% of your overall profits will come from less than 20% of your trades. So which means that your returns are completely non-linear. So if a strategy like 920 short straddle is giving you a overall profit, say for an example 1 lakh by the end of the year, it is not going to give you a 20,000 or 30,000 returns every single month, or 10,000 rupees of returns every single month, adding it all together giving you 1.2 lakhs by end of the year. The returns will be completely non-linear, which means that your overall returns by the end of the year could be positive. It could be 1 lakh, but on January it could be minus 20,000. On February it could be plus 30,000. Again on March it could be again minus. So it keeps on varying. But your overall profits will come from just 2 or 3 months. We never know which months are those, because it is all about one trending move or a big sided one side move, which gives you overall profits with respect to a strategy like 920 short straddle. So obviously your overall returns will come from very few number of trades. So in order to verify that, we could see out of 1300 trades that it has generated in the last 5 years, if I remove just top 10% of the trades, so if I just remove 130 trades from the overall trade results, then the overall returns for the complete 5 years itself will turn negative. So if you're seeing a profit of 5 lakhs or 6 lakhs from 920 short straddle strategies, if I remove this top 10% of the trades, which means if I just remove the most profitable days and check the overall summation, then it ends up in overall negative returns. So this clearly states that your overall profits, the 80% of your profits will come from less than 20% of the trades. So obviously there will be months, there will be weeks where this kind of strategy will tend to underperform, will tend to give you negative results. We can't expect a positive returns every single month with this type of strategies. So this is the live profits after all charges since inception. So as you could see, from the months like August 2020, it made around 30,000 profits after all charges, and months like December 2020, it made 46,000 profits, and April 21, it made 61,000 profits. So these are some of the a few months where it made so much of high profits, and there will be flat months and there will be negative months where September, October did not make profits, and again December 2021 it made profits. So it will not make profits of around a fixed sum every single month or every 2 months once. There will be certain period of months where it tends to give extraordinarily high profits, and there will be certain period of months where it tend to give you no profit zones or a minimal losses period. But it never gone bust, or it never went to a greater drawdown period, as long as you don't curve fit it. So a strategies with is having a fixed stop loss without having multiple different parameters, that is how it works. It tends to give you a profits during certain period of time, and during a period of time any strategies will always go out of sync with the markets. So those are the periods where our strategies gets into drawdown or gets into a time drawdown, where it finds really difficult. It could be prolonged drawdown, which could be for 2 months or 2 weeks or 3 or 4 months also, but eventually it would come out of that and makes profit. But people who could stick to those periods during those rough periods eventually get benefit out of it. But that is when people will tend to think, okay, this strategy has stopped working because in the recent past of 8 months it did not give so much returns, or in 6 months it did not give so much returns. Probably have to change the strategy or tweak it or have to change it. So all this dilemma will come in when people go through a long prolonged time drawdown. So the only way to sustain a time drawdown or a period of non-performance is to find out the right position sizing for your strategy. So for an example, as I said earlier, the premium varies between Monday to Friday. So since it is a start of the expiry, the premium will always be higher on Fridays and Mondays. Wednesdays and Thursdays, the premiums will be lower. But since we are using a fixed stop loss throughout the same period, so when the table that you're seeing is nothing but what are the list of average premium from Monday to Friday. And the next table shows if 25% stop loss is hit, what is the points that we could lose. And the third column shows what is the loss in terms of rupees for one lot. And the fourth column shows what is the PNL, or what is the loss if both call and put stop loss gets hit. And then finally it shows what would be the overall net returns for a capital of 2 lakhs. So as you could see, Mondays and Fridays when the stop loss gets hit, if you're using a stop loss of, if you're using a capital of 2 lakhs, then the loss could be as high as 3%. But the same stop loss, if it's on Wednesdays and Thursdays, your stop loss is only 1%. So obviously, based on your capital, you need to change the number of lots that you're going to trade based on these trades. So for an example, if you're trading with Fridays and Mondays, instead of your complete lot size of 5 lots, you can just reduce it to 2 lots or 3 lots on these days, and trade with full lot size on Wednesdays and Thursdays, since statistically those are the days which has given you higher profits. So instead of stopping trades altogether on the other days based on day wise profits, you could reduce your overall lot sizes drastically on days which is not favorable for you, and increase your lot size on days which is favorable for the strategy. So if we do this, then the drawdown could be under control, and also we never know when the strategy could get back into a profitable zone. So we need to sail through these rough phases. So in order to do that, the only way is to handle our position size accordingly. So increase or reduce your position lot and lot size accordingly, and then if you trade, definitely this could help us out during the drawdown phase. So to conclude, whether a 920 short straddle strategies has stopped working, no, definitely not, because any strategies could go out of sync, when the with the markets at any time. But eventually, those drawdown periods, those time drawdown periods would get over, and it could get back to a profitable zone. So the only thing that we could do is do nothing is the only thing that we could do. But many people know it would be really hard for them to continue with strategies after streaks of losses. But there are a set of people who have used multiple different parameters and did so much of optimization with the 920 short straddle strategies, and they are the one who are suffering a lot, because they'll see a very good backtest results, because they would change so many entry times, like they'll have different entry times for different days, different stop losses for different days, to see a very beautiful backtest results. But when they've deployed it live, definitely their maximum drawdown currently would have crossed their historical maximum drawdown. So they'll be in a dilemma: should I need to stop the strategy since the maximum drawdown has crossed? But when you do so much of optimization, obviously you end up curve fitting your strategy, and it might not work in the future. So make sure you don't do those mistakes of doing so much of optimization with your entries, stop losses, and other parameters. Keep it simple, keep it just one or two parameters, without changing so many things on the day wise results. Like Monday to Friday I'm changing stop losses, entry time. That is not going to help you out. You could change the lot sizes based on day wise to have a very best robust position sizing rules. But if you change the entry and exit rules based on day wise, that could definitely have a bigger impact. So to conclude, this is my conclusion. So if it stopped working, no, definitely it is not, but it might take a longer time to get back into a profitable zone. So for that, the only way to survive is with the right position sizing. So thank you guys. If you guys have any specific doubts, you could post it in the questions window. I'll address it. Thank you.